Ready? Audio on. Huh. All right. Sorry, guys. Was wild there for a second. My microphone is a mess, just so you know. And if I'm literally holding it, because the stand, I left it at the other office. So, anyways, I'm going to try and be super cautious here. Yeah, I'm in a couple plays live also, so if my eyes are drifting, sorry, it's because I got something on the table, which I normally try not to do, but unfortunately, just how it turned out this morning. But that said, if you're new, welcome, and what we're gonna do right now is just like any other business, right? We do a Monday meeting, and we just kind of go over what is important in front of us. Man, I need to get out of this position so like my brain can think. I hate that. The worst every Monday. And can you guys hear me? Check. I'm gonna type. Yeah, it's because my computer is here. Me. I'm having some serious lag. Possibly internet issues. Hopefully it's not horrible. Steven, can you hear me? You're still muted.
Yeah, I can hear you.
Okay. I think we're gonna need to cut this position soon because we looks like we might be bouncing just a little bit, which is fine. It's whatever. All right, so welcome. I got a couple people in, so let's go ahead and kick this off. Just gonna do the quick plan ahead for this week. I'm gonna try and run through this as fast and efficient as I can. And like I said, I got a couple things on the board, so I'm like, might just want to cut it. Um, so that said, before we get started, gotta do this one, right? We are an options trading group, and if you're thinking about trading options, you should carefully consider whether trading in general is suitable for you, considering your circumstances, knowledge, and financial situations. Um, and if you're not familiar with options, you can always call 1-888 options and get a copy of characteristics and risks of standardized options before you start trading. So, um, and then if you missed that, my mic stand I lost. So I'm using this literally sitting in front of me. Hopefully I don't drop it, but it's very possible. So every Monday we're going to go through and just take a look at what are some of the main events or headlines that actually moved markets. It's all interest rates, nonstop inflation rates, right? We had oil was a thing for a little while with the Russia situation. Not so much right now. It's been pretty quiet on that front. Um, but that said, I remember. Do you remember, Stephen, when I remember listening to the TV and I heard Yellen literally comment like, "Hey, well, maybe we probably shouldn't have used the transitory word, right? Or maybe what did she say? Maybe
Yeah.
we could have come up with a better word other than transitory." So that struck me as something I would remember. But that's really the whole theme of this week, right? This is a huge week in terms of economic data coming up. So be ready for a roller coaster ride for sure. In terms of other notable, headlines, I think it was Target. Definitely Target. They were actually talking about inventory excess. And there was an article that came out last week that actually said that their inventory rose 43% last quarter, which was, I mean, that's insane. So inventory raises 43%, and their margin, they said they were expecting like a 2% margin instead of 5%. So short retail is the name of that story. But when it comes to inflation, I think what we're looking for really is less consumer spending. And if we have less consumer spending, well, then hopefully inflation will come down. But we're very early innings of that. I think we had the ECB, or European Central Bank, last week come out. 25 basis point hike was expected for them. It's important to note that kind of stuff right now, just because the global economy at this point is actually going to start affecting us quite a bit. I don't know if anybody remembers in the actual pandemic, there was a point where in terms of bonds, right, the global rates had a huge factor on what our rates ended up being. So now with global inflation, that's going to have a huge cost on what our costs end up being. And I think it was maybe 2 weeks ago, we got the PPI number, which is the producer price index and the producer inflation rate. That's gonna come back into play, and it's gonna come back into play this week. I think that was the first like head scratcher number. We're like, okay, well, CPI looked like it was lower last time, but then PPI was not, something like that. Bloomberg article, inflation tops 10%. And what was funny about that one is that it's all in fuel, power, groceries, right? When we look at these CPI numbers, we're actually talking about what the Fed looks at is core CPI, or the core inflation rates. And core specifically does not include things like food, oil, energy. And like every time I have this, we go on Monday, I'm like, it kills me that they don't count that, because it's like the biggest thing, right? And here we are again. That is the major driving factor of inflation. I think this morning we did catch some of like the yield inversion again. We'll go through some of that stuff. I think we had some short-term bond, what are they called? Auctions this morning, which probably affected that. But the yield curve in general, I would say, is not really, it's not like a metric that you can put on a chart. Like actually, if you put the yield curve on a chart, it's like the worst indicator ever. But yeah, it's just kind of like a flashing warning sign. It's not something to be like, oh, this is happening. Um, and consumer sentiment came out last week, and that was actually a record low, which crazy, right? Um, or not, depending on how you think of it. Last week, I think we were talking about stagflation, or I mentioned it, and I mentioned that I hadn't heard anybody actually say stagflation just yet. Well, I was wrong. Well, it happened, and that was the World Bank. So I grabbed, if anyone's not really familiar with stagflation, I just grabbed a quick, like, I don't know, Google image on what that looks like. But it's where GDP goes down, right? Which is, we've already lowered our forecast from the US perspective. But the global perspective is also going down, global production, right? Unemployment starts to go up. What we can say right now in terms of unemployment is that we're pretty much like at peak employment. Not, I mean, not peak, but there's more jobs available than there are people willing to take the jobs. We've definitely had that. And then if we do start to get this demand going down, which is what we heard from Target last week, that those three things, this is recessionary, right? And inflation going up all at the same time. This little, you know, situation here, that was, I don't want to say it, but that was the worst case scenario. I try to find some good news. Did you find any good news last week, Steven?
No.
I really tried, and I just, I think we're all like bullish by nature in terms of like if you're in the stock market. Um, I want to find some bullish comments or something, but I just really couldn't find any. And it is what it is, right? It sucks to see like a long-term portfolio dumping like this. You can't go to bonds, you can't go to stocks. Like you literally just have to sit in cash. And if you have at least maybe a portfolio you can allocate some other things to, it's very tough. Like you can't really go in the 3x leverage ETFs because you have to trade those pretty frequently. I mean, options is really where it takes me personally. But that said, I think it's a good it's a good thing if you can learn how they work. Really, looks like we're getting a little bounce. So that said, I'm going to run through really quick some recap headlines. So this was last week. So balance of trade, yes, we know. So this was core CPI, right? Core inflation rate. The year-over-year number came in. Is this right? 6.6. I feel like that's not right. Well, that's the core. So core does not include the most inflated things, right? Like the food, energy, etc. So, okay, that makes sense. And I think the market really didn't take a whole lot of time to digest this last week. I think it really started on Thursday. Did we get something on Thursday? Was there a number?
I
I
don't
feel
think
like it
so.
was Thursday where we started to, it was like, oh, okay, it's about to happen. Um, but anyways, the month over month, right? So inflation rate month over month, this whatever one down here this is. So when we look at these numbers, and we'll go through this coming week, I'll have actual. Well, this one I'll have actual because this is what came in. But as we go through, it'll be previous and consensus. So the number that's important is the consensus number. Previous is not as important, but what consensus means when we're looking at this kind of data, consensus is actually what the market is currently pricing in right now. So if something is at consensus, well, I would not expect a market to move, right? If it's at consensus, well, the market was already expecting that. If it's below consensus, that should move a market. Or if it's above the consensus, that should move a market. Similar to what you're looking at when when people try to estimate what's going to happen with earnings, right? Like, okay, well, they beat, right, the prior number. Well, nobody cares if they beat the prior number or not. What matters is if what the consensus was and where they come in from there and how the market will draw lines from there in terms of like, well, where do we think it's actually going to go? So core inflation rate month over month and the standard inflation rate month over month, that's important because that's the current progress. And the market was pricing in peak inflation. I mean, we know they were, but I don't think nobody here ever bought it. And anybody that did buy that we were at peak inflation, well, they just got like proven completely wrong last week, and that's what this is all about, right? And that flipped this consumer sentiment to 50, which is that's pretty bad. I mean, this is a huge consensus point 0.7. Yeah, that must have changed at some point. I don't know. I feel like it was lower coming into that report, but yeah, they thought that the year over year inflation rate was going to be the same, which would have been good for the market, but it came in higher, and that was the end of the dead cat bounce to me. But that's pretty much where we are. So I'm gonna, we can look at this and review. I mean, this is the peak earnings situation that we talked about last week. I don't think it, maybe they'll start to talk about it this week, but clearly, if you track the last year of the Dow 30, top 30 companies in the Dow, you know, in terms of are they beating, are they meeting, are they missing expectations? Look at this. I mean, a year ago, 29 beat, one miss, right? 27, 26, 22 last quarter. That's the worst in a while. And this is like the lifeblood of the stock market. So headline stuff this week. We got 1, 2, 3 big fat days that are ahead of us. Tomorrow is producer price index, and that was the number. So if CPI is consumer inflation, right? PPI is producer price index or producer inflation. And if the producer numbers are coming in higher, then they're not going to just eat that. So the market will probably start to say, well, they're going to continue to pass that down. And I think it was that Bloomberg headline that put them at 10. God, could you imagine, dude? I literally paying $7 a gallon of gas. I'm pissed. Uh, but anyways, it's gonna get
I'm
better.
pissed at my 540 a gallon.
540 is pretty bad for you, actually. You guys
It's
are,
yeah, it's
yeah,
really bad for
yeah, East
Florida.
Coast too. Oh man, I'm sitting on these 375 puts too. By the way, for SPY, just a 0 day, small position. But yeah, 375 today. You guys are. We'll go through this right now. But yeah, it's not a bad price if you want to load them for a quickie. We'll be done out of those by the time I'm done with this. I hope, really hope. So Wednesday is the biggest day of the week. Wednesday is like the massive day, right? So everybody was talking about CPI last week. I think, yes, that was a big thing. Market completely flatlined because nobody knows what's going to happen, right? CPI comes out. We have this epic move over the weekend. But what's going to happen, in my opinion, is that like it's all going to come down to this rate decision Wednesday. So you remember last week, right? Or last time, they did a 50 basis point hike. Um, I was in the camp for like, I really want to see some ridiculously high number. Like to me, they have to really, you know, they have to kind of smash the stock market to get us kind of back to normal. And that's what we're talking about, right? It's the, excuse me, the rate to neutral. I don't know if you guys remember that, but if the inflation rate is here, we were at 8, 8 and climbing, right? Now we're gonna, let's say we're at 10%. I don't know. And get this, and the inflation rate is at, what's it at now? 1%. They were at 50 basis points. Whereas 10 in inflation, 50 basis points. They moved to to 1. They added basically 50 basis points. But we need to get these like neutral is where they are equal, right? And so the question is, what is the pace that they think they need to raise interest rates to get this back down? Remember, inflation isn't just by printing money, right? It's all about consumer spending. So if people are still spending money, prices aren't going to be going down, right? It's not until people stop spending money that prices will start going down. Hopefully, what Target said last week, they talked about having this excess inventory, which means that if they need to get rid of that kind of inventory and people are not buying, they need to start slashing prices or throwing out some crazy discounts. That's what we're looking for. But the question is like, how fast can those two numbers meet, right? And the Fed is only in charge of one, but really that one number is the interest rate, and it's not even about that. It's about how fast consumers are spending. that will drop inflation. God, am I about to get crushed on these puts? That'd be fun. All right, so jumping in just really quick. So we did have a, what time is it? A speech in a couple hours from Brainerd, which is, I think Brainerd is the vice chair now. So we'll see how that goes. This is those short-term bond auctions that came out this morning, probably influencing the yield curve, which is fine. And we got consumer inflation expectations. So again, I don't know who's coming up with these consensus numbers. That's wild to have Monday's number still below what the previous was. I mean, that's just like, okay, adding fuel to this, dumpster fire. But whatever, it is what it is. As we move forward, so I'll look. So I'm on the West Coast. Sorry, I might not have. Oh, these are all going to be at the same time. So West Coast time, it's 5:30 my time. Yes, I know it's stupid early. It sucks. It is what it is. But I get out early, so haha. Tomorrow we have these PPI numbers. So just like we had core CPI numbers, we'll have like four of them. So we'll have the standard PPI month over month and the year over year, and then we'll have the core PPI month over month and year over year. So again, same thing, core and PPI producer price index versus CPI consumer price index. Core number does not include gas, energy, fuel, energy, what was it, food, all that kind of stuff. So your basic costs of doing business. So there's that. So anyways, we are looking at the market's expectation or consensus for PPI. What the hell? Is still that's going to go down. I don't know if it's going to go down or not, but I'll tell you right now, pulling this data, last month was 11%, and this looks like they're expecting that producer price index, producer inflation rather, goes down slightly. So this number may change tomorrow. This is first thing tomorrow. Man, this is gonna rock us for sure.
Yeah.
So if this number comes in something like 10, that would actually be a really like green light go, turn around Tuesday, boom, full on, right? For sure. Which will likely be smashed right when we get to Wednesday because we actually have the real FOMC rate decision. If it comes in higher than 10.9 or even higher than 11, look out below, man. Because I don't know who comes up with these stupid numbers, but this is what it is. I don't know why. It was just too much optimism. So it looks like there's a lot. If it comes in higher, there could be a lot more downside to come. We'll see. It's unfortunate. It sucks for the long-term forwards, man. I'm feeling it. I'm just like, hedge, whatever. Okay, so that brings us to Wednesday, the biggest day of the week, right? So Wednesday, I don't think retail sales probably not going to be a big thing. These are big numbers, just to say. Again, yeah, if the business inventory, God, are higher than the consensus, yeah, we're going to start hearing a lot of the stagflation talk for sure. But all of that's going to be drowned out completely by the rate decision on Wednesday. So whatever economic data typically comes out, that's fine. This stuff is going to move the market. So 11 a.m. Pacific, what is that? 9 a.m. Eastern. You know, so this is the difference. So what the market's pricing in seems to be another 50 basis point hike.
I was reading yesterday that the market is now pricing in, I think it was an 83% chance of a 75 basis point rate hike.
Nice. Well, I'll tell you what, the market needs that.
Right.
What's the, let's see, there's a CBOE interest rate. I forgot what it was called, but we used to use it. Do you remember it? Countdown FOMC. No. Damn it. You could, like, Google what, I don't know, CBOE, what's the market pricing in? What interest rate, right? What is the market pricing in? And there's like a whole website. I guess it must be that. Fed Watch tool. So I just Googled that. Yeah, okay, so prior probabilities. So, yeah, so this is like, really? So they're saying, so this is the Fed Watch tool, so CME Group, interest rate, / countdown to FOMC, blah. Where'd it go? What just happened? I just Googled this. Anyways, takes me here. I saw a different thing. Okay, so currently market is pricing in. I'm looking at 67% probability. I don't know what dingbat. 25 to 50%, 50 basis point hike, and then 32% probability of a 50 to 75% basis point. Remember, we're at 1. Bless you. I don't know what to say, man. It's gonna. The question is, so like, look, if we have X amount of FOMC rate decisions left, and in the year, how long will it take us to get to neutral, right? If inflation isn't coming down. So if we did 50 basis point a meeting, I don't know what month is it, and we have one, let's say 5 more meetings, that would take us to like 3% maybe by the end of the year. And where will inflation be at that point? I don't. Do you see what I'm saying? Like, we gotta go a lot faster, even though the market, the bulls don't want it, but really, if you think about it, we need it. That's just my opinion, not investment advice, right? Whatever I'm supposed to say. Not an economist. It is what it is. So, moving forward, right along, right? Thursday, we don't have a huge amount of data. We do have some housing numbers. Again, this is actually part of the biggest piece of our consumer price CPI, right? So, like, where is our inflation coming from? It comes from houses and cars. Those are the biggest components. So, if house, we haven't really been talking about a real estate meltdown or anything like that. I mean, people talk about it like, it's not going to happen. We'll see. We shall see. The market's starting to price that in, right? So housing, building permits. Housing is more residential. Building permits more commercial. Market is pricing in a small drop on both of those. I don't think continuing claims is going to matter at all. The only thing I put on here was the nat gas report, which it could be a thing, right? So gas is dumping. Oh, shit me. Yeah, we out. Let me just send this. SPY just kind of squeezed just a little bit. Where's my stuff? You never know. I don't buy it either. Are you buying this little pop? Who knows? No. So Friday, June is the last day, right? So Wednesday, rate decision, right? Thursday, tomorrow, Tuesday, PPI, Wednesday, rate decision, Thursday, break, basically, Friday, Powell speech, right? So, I mean, we really don't get a whole lot of reprieve this week. It's going to be wild. So, Baker Hughes oil recount's not really going to do anything. But that's pretty much where we are. So, this is 5:45 my time Pacific, so that's before the market opens. Man, it's gonna be a tough one. And then, oops, I just lost that. Yeah, if you do this other stuff with us, I will have another trading foundation coming this Thursday after the market closes. Hopefully, it'll have I highly doubt that it'll be a relaxing day. Highly doubtful. We'll see. But we'll go through that, and then I think actually this afternoon I got one of those webinars with Wolf, and then Thursday morning we usually do the live training with Wolf also. So I'm going to take a quick look. Cool. So usually I'll start off with a 30-minute chart and just have a little bit of a wider view. I have not thrown any levels on this at all. Today, this morning, I have on my radar, like always, 1, 2, 3, 4, top major indices. So SPY, Qs, Diamonds, and the Russell. So all of these, yeah, we're bouncing here. you do have little gap fills, so maybe we trade the gap in the meantime. But here's what we're gonna do, right? On the bottom, by the way, today I have 10 or 20-year plus bonds, TLT, right? So inverse relationship to the yield itself. I got crude oil futures, and I don't know if you guys watched any of our stuff last week, but gold had a wild spike on Friday that we like absolutely like banked on. But I got some people asking if I swung any calls for gold. No, this thing trades wild after hours, so I didn't know, and it's the first move, so typically a fake out. We'll see how this goes. This does not look like it's going up. I should probably put. Has anybody looked at Dixie today? Oh yeah.
It's up pretty big.
A lot. Oh, you're right there. 105. This is so. Where's the money going? Right. It's going to dollar. It's not going to gold. It's definitely not going to crypto. I think it's getting destroyed today. But let's just jump into it. So these orange boxes here that I have, this is an average week's range. I think I put a note. 375 was my target today. I probably pressed a little too much later in that half. So on an average week's range, just this gap, right? Like we moved an entire average week's range in the course of a couple hours from Friday's close to now. That's wild, man. Wild. So this last 48 hours, typically this last 40 hours, wow, geez, like right, each one of these days was almost a full week's range. So maybe we range for a little while. We're gonna come up on this 389 level. Do you have any levels for so just from a measuring perspective, right? If we do, let's say, from the opening to the downside, if we were to stretch it to the downside, it's 366. God.
I actually have 366 on the nose.
Really?
A previous, yeah, it was a previous level from the last time it was there. 375 was a psychological level, which is actually exactly where we just started bouncing. Yeah. 380, what is this? 380.50. I have as another level, and then 390.
Yeah, so just if I measure this, right, so we're going to mesh two schools of thought here. So just using these average moves on the upside, that takes us 393. On the downside, 365. Whew. Wild, man. Wild. That would be gap fill plus, and then right up to that pivot. So this, what was your 390? What did you have? 390 something?
390, yeah.
390 here, so I'm going to change this. So 390 to the upside. So basically, oh, that's the gap fill. If you want to take a shot at a gap fill, I honestly, what would you say, like, would be a good, probably, like, area to take that shot, if you're going to take it?
To take it long?
Nobody wants to take it long.
Yeah, that's the problem. I mean, it's if you do that, you have to understand that it's going to carry a little bit more risk than playing anything to the downside right now. But it doesn't mean it can't happen. I would size down on it. I mean, if it breaks, if we get a clean break above this 380, come back, test it, and then it wants to go, maybe I would consider doing that with some like 385 calls.
Yeah. Yeah, I got, so this pre-market, I'll call it like a pivot. Yeah, Steven was saying 380. I have about 382 for that pre-market little wick, and then, it could push 385, sure. If it goes over 385, yeah, you'll make a quick press to 390.
Mm-hmm.
That's a no question, like no brainer in my mind. But we're just not quite there. This is gonna be a chop week, man. I would say iron condors are your friend for sure. We had VIX. We'll take a look at the VIX. It's way up there, but not quite at the major range. Oh God, look at this, dude. That is a lower low. Period. End of story.
Mm-hmm.
That is unfortunate. So I have this broadening range here, this larger term broadening range. I gotta zoom out a little bit to the daily and see what that's about. Oh yeah, okay, 1, 2, go. That's not pretty. So yeah, I mean we tagged that low end of the broadening range and 366. This is your level. Yeah, we got this little kind of stall out momentum right here. What is that between November? Yeah, November and February lows of 2021. Yeah, not last year, but the year before. Okay, yeah, that's right after the COVID. So before COVID pop, you know, you guys ever do this? I'm gonna take a, where is it? We were talking about this the other day. It's a anchored VWAP. Where is it? I know it's in one of these. Anchored VWAP from the COVID lows and see where that puts us. Right, so I just tagged it right there. And, oh yeah, that's beautiful. We're below. And bouncing back up to would probably put it about, what is that? Oh wow. Our anchor from the COVID lows, well, we're way below. What is that about? Interesting. Yeah, 385. Oh, shit. There it is. Dude, did you see that?
What?
Is that blue line? I just took an anchored VWAP from the COVID lows, and it takes me to 385, like on the nose. Wild, man. I did not plan that. Swear. Yeah. What is that? I could move that somewhere down here. Yeah, that's what the. There you go. So this is like the official pullback, which I mean, we knew. Anyways, so those are the levels on SPY, right? So SPY, I would take this like on a rejection, literally right here. I'm in a short that people are probably, if they're trying to follow, they're probably freaking out, thinking like, what the hell is wrong with this guy? It's a little short dated, but yeah, it's this broadening range on the downside. We could easily flush through it, and then 375. From just Friday was, I mean, we did tag that, so target acquired. It was just, I hate Friday mornings or Monday mornings. Like the IV is so insane. But yeah, literally right here, that's a short. I would add, but I'm doing this, so there you have it. Huh. But yeah, it's a lower high. Now you just want to see it coming down. Anyways, let's take a look. I'm going to pull this back a little bit and take a look at the Qs really quick. So if we're going to be talking interest rates this week, there are two sectors that would be the most sensitive. One, I mean, absolutely is the Qs. And the second's actually like IWM, right? So the small cap stuff. They don't have, like we were in COVID, right? Microsoft isn't falling as much as some of the smaller companies. They don't have the capital really to, sustain that kind of stuff. And if consumers are falling off, then it's really going to hurt them. Okay, so from Friday's close, and again, Orange Box is an average week's range. From Friday's close, the Qs would take us to 272 to the downside. You cannot, like, when you look at these charts and you look at this gap down from Friday, first of all, the Q's gap is already filled. It's filled right here. So there's no gap. See it? Hope you see it. So you cannot be bullish on this sector until it's over 288 or really 290. I mean, and even then you're God, that's kind of risky. But so first target to the downside, like, and if it does come back up to something like this, I would be looking for it to fail, and that would be a short entry. But anyways, first downside target on the Qs would put you to like 272. Just that's from Friday's close to a week's average range. Second would be from today's open down to 263 and change. And again, that's just an average week's range. So I'm gonna throw a line right there. I want to go back to SPY real quick, and I'm going to skip the diamonds today. I hope that's okay. If anybody has anything. No. So I closed my Intel puts. So Damien's asking if I'm still in Intel puts. Man, I closed them Friday, and I rolled into the 35s today for next month, not this month. So, but yeah, I loaded those, but I put a note on there. I plan on actually scaling into that. So, little baby, like 10% now, and I will be adding, most likely. So, holy camole. I must not have marked. Well, so here's Friday, right? Friday here. And then Thursday here. And that was the beginning of the end, right? So I'm going to look at the calendar. Say last week, what happened? Thursday, jobless claims, 30-year bond auction. Yeah, Friday was CPI. It's just that anticipation. Yeah, that's what I think. I don't see anything major on the calendar from last week of Thursday, but CPI was Friday morning, and that was like, she done. So, yeah, they got out of the way. I know it's funny. We did a Wyckoff, I think a Wyckoff accumulation distribution thing with a buddy of mine last week, and we just looked at this, and it was like to a T, exactly the Wyckoff schematic, and the crypto too. Like that guy destroyed that. It was short ETH call like a week ago, and Bitcoin. But anyways, I digress. So what do I want to do? I don't think I'm not personally super interested in diamonds for whatever reason. I like IWM. Last week, to me it was like, okay, grab these 182 182 puts like at this break. I think it was Thursday, and just, I mean, that was a monster. But we're continuing to the downside. So again, orange box, average week's range. The reason I'm kind of interested in this is like if you look at this, IWM has been pretty static, like not really moving a ton. Now all of a sudden it is, and we have this super broadening formation here that may need to be adjusted on my end. Oh yeah. So I just got those two. If I just take the prior two, oh goodness. So this is just the prior low. Oh my God, Stephen, look at this. That puts you down to 115 change.
Okay. Wait, what?
Yeah, I know. We're not even that far away, right? That's the thing.
Right.
And so would that be? Now I need to measure this. Yeah, actually, it would be within range for this week. Oh God, let's go 160. So I think, if we can get some kind of back like gap fill here, it doesn't have to happen like at all. These gaps are going to be notable. People are going to be talking about things later. So maybe at some point they do get filled, but it doesn't mean it has to be anytime soon. Who knows? It just depends on your time horizon. Those are big though. On like SPY, diamonds, yeah, IWM. So gold, I do want to take. So let's do VIX really quick. So the VIX, we opened at like 34 this morning. So here's the VIX, right? Like we don't really get the real sell-off till like way above. I mean, if we can get above, like I'm thinking in my head, I'm like 45-ish. That's usually like blow off on the bottom end. See this, like boom, boom, this kind of stuff. That's typically the bottom, right? And this is 40s, 40 something. So I mean, all last week and all of this, I really wasn't buying it at this point. Because it hasn't really pulled back all that much. Like we may get a little bit higher than that, but it won't really be until we're definitely above 40, before I start even thinking about going to the thrift shop and nibbling on anything. But yeah, this is what we're looking at. I mean, hey, good news is we're gonna have some serious sales real soon. So do you guys, I'll take a look at Intel. Do you guys if you have any tickers that you want to take a look at, throw them in the chat section. If you can't chat, it's because you're not subscribed. If you're not subscribed, subscribe to the stupid channel. It's not that hard. Just click it, and then you can chat, throw them in there, and we are off. So I'm gonna take a look at gold really quick. This one, believe it or not, I'm kind of feeling short. Right? As weird as it was, this gold. So this is an average week on gold, right? And like 2 weeks, actually, 2 weeks. Yeah, okay, GDX love it. 2 weeks, well inside of an average week's range. So to me, when we have something like this that's been trading like that in a very consolidated range, we are primed, right? Primed for a big move. It's same thing like SPY, right? We were about 2 weeks within an average week's range. We're about to be primed. So at this point, yeah, I think it's very clear. Like I got a 169 level to the downside that we just tagged this morning. And the question is, are they going to be flying to gold or cash? And I'm just not seeing gold right now. Above 175 or really above, where was this breakout level? The breakout level yesterday was exactly where we are, right around here, just under that 200 day. So remember, when we trade around these 200 days, this is a typical like whoosh, 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 whoosh in both directions. I think that we could probably get both. And I'm going to throw like a little, I'm just going to, connect the dots on these tops because I can see a little broadening range right to the upside. And we got that for the Stratters, right? Pivot machine gun this morning, right? Anybody that was long coming in didn't get what they were looking for, and it's just like sell, 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 sell. So that's that poof pivot machine gun. Same thing on the short side, poof to the upside. So now, I do have this really old. I won't take that. I'm just gonna take these most recent, this bottom, and this guy for right now. Actually, so this low, tag that, and this low. So we're kind of on the lower end of this broadening range. So maybe if we get a bounce around 169 to go back up through this range, I mean, this guy's moving. Ken wants to take a look at GDX, so let's do that. I'm just going to load up a new chart. I got to keep an eye on the indices on with my other eye. Yeah, Coinbase, God. Can you believe crypto this morning? Or all weekend? Like, what?
Yeah, I was going to say.
Dude, my buddy Wolf, Gavin, I was like, he put out on Twitter, he was like, hey, whoever's closest for Ethereum price at 9:30 a.m. Pacific will get you $100. I'm like DMing Bruce. I'm like, quick, what's the answer, dude? He ignored me. Dirtbag. Anyways, all right, so here we go. So wow, this is major consolidation on the monthly level. So this is always how I look at it, right? Monthly view, weekly view, daily view, and I got an hourly, and then I'll zoom in on the 15, right? So always multiple time frames. You gotta have it all in view, otherwise you really can't see much, right? So we're well below the 200-day, great. I got a little base forming on this weekly. What's that look like? It looks like we're sitting right on it. I'm just gonna draw a flat line straight across, right up $30. Nice, clean, even. Ooh, psychological level. I'm gonna sync that across all the charts, and we bounced right off of it. So the weekly pivot, right? And now I'm gonna zoom into some, smaller time frames. What you can see here is so the red lines on my chart are the monthly high and low. So if I took this into a monthly candle, right, that's this candle, high and low, right? The yellow lines are the prior week's high and low. So candle, right, yellow, week high, week low. Right now, we have an inside day, really. So there's not a trigger. It's not a trigger really until tomorrow. So here are the two triggers. So one trigger here is at 30.35. So if GDX breaks below 30.35, I want to take that. I don't want to take. There is a smaller trigger, and I'll show you what it is here. I don't want to take this rinky-dink trigger tomorrow, which would be, what would it be? How do I say that? So tomorrow, let's say if GDX closes like this altogether, tomorrow there would be a trigger from 30.53 down to 20 cents, right? I don't want to take that trade. I would rather take this bigger move from 30.37 down to 29 and change, and then that gives you lower targets right here, right? Which would be 28.87. On the flip side, right, I'm going to go back to this daily, sorry. If this closes today with this being the high of the day, if we start trading for like an hour or more above 31.61, first target straight into 32 and then 30, almost 33, right? 32.90 would be your real targets up there. That's a good tradable zone. Unfortunately, so on the bottom left of my screen, this is your time frame continuity. You're trading against the trend in that regard. So just be aware. This is a question of, is it going to be a flight to cash or is it a flight to something else? And right now, I see cash. So I would actually, like I said, as weird as it sounds, I'm leaning in the bear camp on this guy. But there's a big trigger. Yeah, because if we go below that, if GDX breaks below 29, right? Look at this. 28.87. Where's our next target? Good night, right? We're way down here. 27. And it's like, this is like your, downside whoosh, like machine gun kind of situation, right? Sure, there's probably gaps and stuff in there. Oh, there's a gap, right? So, okay, so I don't know if that's actually a gap. 26. 26.50? Wow. All right. Around 25, right? So probably something like a 35-25 debit spread, or maybe like a 25 put calendar. But yeah, she can dump if the rest of the market dumps, and she can dump to 20. I bought it there before. Yeah, that would be your major support. I mean, that's epic support. But it is what it is. If it moves fast, it starts to move fast. That's all I can say. So upside targets above 31.60 up to 33, and then above that up to 36 on this monthly candle. So just basically filling out that monthly range from this red line to that red line. Otherwise, below 30, we start loading these shorts. And it might not even have to be a debit spread because those pay fast. We'll take a look at them. All right. So next one up, Intel. Right, Intel has earnings coming. Yeah. I mean, this thing is this is such a horrible chart. What is it? July 21st, right? So INTC, Intel, INTC earnings. Yeah, July 28th. That's not till next month. So you got to think, well, do we think that people want to be in the stock coming into earnings, right? That's all I'm thinking. Like typically people want to trade for this pre-earnings run-up. I'm actually thinking the opposite, right? Pre-earnings flush. We cleared. So on Intel, the reason I pressed the bet, we're just clean below last week's huge candle, right? That was a big candle. We are clean below it. And if I pull this back really, like, look at this. Where's my next target, right? Like, I think I grabbed a 35 put for next week. You're right in here, which really that was the major goal for the last one. It's just about a question of timing. And I'll close it probably before then. But that would just put it right in this consolidation level, and it really, I mean, it could go lower. That said, if you're a fan of these kind of stocks, like, there's a good fundamental story for Intel. I'm just looking at this consolidation. I bet you if we pulled Bruce in on this, then we could say this would be like another Wyckoff schematic if I look at this now. But anyways, I'm ranting. Was I going to say anything?
I don't know.
Me neither. Anyway, oh, fundamental defense, right? Like there's this stuff, if war stuff comes up, right? Like Intel's a good company. I won't really. Their technology is crap compared to AMD and Nvidia. Nobody's going to question that. But what I would say is that let's say Intel, AMD, and Nvidia, they don't manufacture anything, right? They all go to like Taiwan Semi or whoever. Intel's the only one that's really like putting money into building foundries and stuff. So if something were to happen in Taiwan, that's why it was such a big deal for, Mr. Biden. If China attacks Taiwan per se, that would crush everyone else except these guys. These would be, they would have a defense, albeit years out, but it's there. To sell 30 put. Yeah, no, I would not be selling puts just yet. No, we gotta wait for it to. And if you do, maybe really far out. But this is so. Ken's asking about selling put. Great question. What I would say is like if you sell puts in a market like this, imagine if you had sold puts in the pandemic. That's the fastest way you can crush an account, right? So let's not don't. It's like if you try and buy the dip all the time, even if it's crypto, like I'm guilty. We're all guilty of this, right? Try to buy the dip, especially buying at support in a bear market. It's tough. It's not a good idea, and you constantly find yourself getting stopped out and stopped out. Just stop, right? Like that's just stop. Wait for the chart to start to reverse. You're not going to pick the bottom. None of us do. We just don't try, right? Like that's what's important. Hang out, watch it. Like don't completely dismiss the market, right? This is where big money is made, right? Like on both on the downside, but really like staying in tune with the market and seeing that flip when it does happen, you'll know, right? Like we knew. I mean, Steven knew, I knew, every trader knew exactly when the market flipped at the pandemic, right? Every trader knew right here, right? Just the other day when we were talking about that bear market rally, right? Everybody knew, right? So you're gonna know as long as you stay in tune, like just stick around. Don't be quitting the market, right? That's not cool. And it's gonna look, even in the pandemic, it was look like something like flush or right and bounce. And you might have been thinking, oh crap, I missed this giant, however big of a move this was. I don't know. It might have been a huge move, right? 20% move to the upside. But look, like any way you slice it, you could have gone down this way. Look, there's your retrace pullback, boom. You would have known, and you would have known, actually, you did know right here, 25 and change, right? Like you can pull it back, all of this stuff, right? There's a million ways to look at it. We're going to look at candlesticks. But yeah, it's not until we have a day that's clean above the next. We might get a bounce, right? But again, 38.90, about 390 on SPY. That's our level in terms of resistance now. It's not even 400 anymore. I mean,
not even 400.
Yeah, if for some wild situation happens and we do get I just say if we do get a pop to like 407 and change, 410, like that's a major short load. That's just what it is. Or at least put your hedges on, right? VIX at 33. I'm looking as we go. Yeah, we're testing these lows again. So, yeah. If you grab those 375 puts, good job. I'm not even looking at them. I don't know what they are. Oh yeah. They probably went from $40 to $80 in the time span of this conversation. But cool. All right, guys, I gotta get back to it. Hopefully you have a good week trading. Just remember, like, be safe. It's gonna be choppy. We just moved a huge amount, and when I say choppy, it's like when we move these 3 days, that are this kind of massive movements. It's not typical that we're gonna have that kind of a continued momentum. But make your levels, like draw your levels on your chart, daily, weekly, whatever. If the level's breaking, then it's breaking, and you could play one leg to the next, right? And that's it. GDX and gold right now, I think they're setting up, right? Those guys have been range bound for a while. And yeah, I'm liking the metals and miners. I don't know which direction, right? I'll just tell you that much. But I do know that, hey, look, if we get this flusher below 30, we got some pretty juicy targets to the downside. Definitely. And then, oh, we should do. Anybody want to look at silver? Do you guys do? Silver is a cheapie for sure. Oh, and if you're, there's a 3x leverage if you like the dust. It's called dust. It's a 2x leverage ETF to the downside, and Nugget, everybody remembers, is 2x to the upside. So Nugget, NUGT, 2x leverage, bull, and dust, 2x leverage bear. Let's do SLV. SLV actually typically has a lot of beta, meaning it'll have a bigger move than gold. And I'm not, depending on oil, so oil is going to be a thing also. So we got to take a look at oil. Yeah, CL. Sorry, different screen. Oil's kind of bouncing, right? Here's gold. Put the dollar, and I'm going to put crude oil. Rates right now, it's just, I could wait for a bounce. Actually, that would be an easy trade too. Oil's bouncing here. Yeah, this is pretty bearish for the miners. I mean, miners' biggest expense is oil. So if their biggest expense is going up and their assets are going down, that's pretty bearish. Do you guys look at Bitcoin? I do. I just want to take a look. So BTC, USD. Although you might not think that there's a lot to trade here. Oh, this got a lot of downside potential. I mean, maybe 20. So I was thinking BITO, which is the actual Bitcoin ETF that people forget about that they did create. This has options. It used to be pretty liquid. Let me take a look. Oh yeah, dude, this is liquid today. These like 3,000, 10,000. Oh god, BITO.
Oh god,
that's a lot of liquidity right now. I've never seen it that liquid. They're all over these 12 strikes. Huh. I'd have to do the conversion really to see what a $12 BITO would be, but that's well within range. It was 4 this morning. Those $12 puts are only $25 with a penny spread. I mean, that's liquid.
That's super
9,000 volume. Hello. Sorry, weird. Yeah, look at that. Even the July monthly 10 puts. Let me see. Oh God, you guys are gonna laugh at this. I'm gonna detach the view that I have in Thinkorswim. Hope I don't show anything that I shouldn't. All right, so 150,000 puts to 37 calls, 37,000 calls. This is BITO, and this is just like quick and dirty, right? I'll open this thing that's called time and sales, option time and sales. Click that little gear, right? I can see the 10 biggest block orders. Holy camole! Yeah, this is that's this July 8th. Is that right? No, that's way out there. 1,700 single trader order for the 15 puts. I mean, they're there already. Let's see. So July 8th is here, 25 days out. Oh yeah. Are they rolling this? They might be rolling this, or they might be selling something against, who knows. What did they buy that at? They bought those at $1.65. About where they are, or not, $1.89. Yeah, that's something's going on there. They might have sold these against just when it wasn't pressing. But yeah, take a look at this. This look at $12 put. That's a lot of volume. Or you could sell some upside calls, right? 15 to would be 17. $2 wide spread, collecting 25% for super short-term stuff. That's not bad at all. Right, you go to the monthly. Oh yeah, look at that, 15. You know what? I'm not gonna go there, but yeah, there's a lot. Oh, they're rolling these down. They were in the 18 puts, rolling down. That's liquid, man. Super liquid. And I don't. Yeah, it's not going up. Interesting. Cool. Do you have one you want to take a look at real quick, Steven?
I don't. I think I think it'd be pretty repetitive. I mean, obviously, I'm sitting here watching Spy and Amazon and.
I knew you were gonna look at Amazon. Look at this guy. Amazon
Yeah.
100.
Oh, dude, I love trading Amazon right now.
You like this?
Yeah. I think it's really good.
All right. Yeah, I was looking at it was like down $4 or something this morning. I was like, what was a 20-to-1 split, a $4 move in the old Amazon would have been
And
80
$80.
Yeah, that's a full day. Yeah, so $4 would be an average day's move basically, on Amazon, which is what the old Amazon would have made. Like would have been an $80 move. So yeah, I mean it's trading like everything else now. $100 level, man. That's a biggie. That's $2,000. $100 on Amazon is $2,000 old Amazon. Oddly enough, there's still more. 87th percentile IV. What? Yeah. This week is just gonna be. I'm gonna try and take it slow this morning.
Yeah. Only super A1 premium setups.
Yeah. Yeah, it's gonna be fast and furious. Take profits quickly when you have them.
Yeah.
And if you're in puts, man, those will pay fast. But just the opening is very expensive, so caution. And else, short that sucker. Yeah. What's up, Tommy? If you got a question, shoot it real quick. Tommy ND9. If not going once, going twice. All right, boys and girls, it's been real. Appreciate you hanging for a little bit extra time and through these technical difficulties. But I'll see you out there. I got, at Paper Gains Inc. for Twitter. I'll get another thing this afternoon and then Thursday morning also. And if not, I'll see you guys in the Discords out there. Cool. Adios.